Hi, my name is Jad and welcome to Rock with Options. We are going to discuss again about the short Nifty straddle, this simple systematic mechanical trade that can be employed on an everyday basis. If you want to learn more about the details, the mechanisms, the rewards, the profits, the risk, please click on the link above. Today again we're going to talk about a minor adjustment that we can do in this particular strategies to see positive outcomes, enhancements of the profit. Let's dive in. Adjustment number 2 for our daily Nifty short straddle strategy. If you want to learn more about the adjust number 1, click on the link in our description. In adjustment number 2, we're going to talk about how do we re-enter or re-establish a position that got closed because of a stop loss hit. Let us get into the details and the reasonings for the same. Here is the detailed mechanisms of the strategy and the adjustment. What has not changed? We still enter at 920. We still sell a short Nifty straddle. Closes at the money weekly put option, closes at the money weekly call option is sold at 920 every day. Stop losses at 25% of the premium collected. You can enhance it to 40%. Take a look at our adjustment number 1 video. Exit criteria is still the same. You manually exit all active positions at 2:30 p.m. What has changed? Re-entry. If the stop loss gets hit on any of the legs, you sell the same leg, or you try to re-enter the same leg at the same entry price for the same strike price. For instance, if you have sold a short straddle at 17,000, strike price of 17,000, let's assume that you've collected 100 rupees by selling the put option at 17,000. The stop loss is at 125. If there's a big swing in Nifty, the stop loss gets hit at 125 rupees. You place a sell order for the same put option at the same strike 17,000. The re-entry price is 100 rupees. Again, that was the initial entry price. If you do re-enter, you again go and place a stop loss order at 25%, which is 125 rupees. The max number of times you can re-enter on each leg is 2 times. Let's look at the reasoning behind this particular adjustment. Many a times you'll see that Nifty swings significantly in the positive direction or in the negative direction, and within a matter of few minutes or within a short period returns back or retreat backs and trades within a small range for the rest of the day. The candle patterns which typically capture this movement is the spinning tops, the doji, the hammer and the hangman. When this happens, your stop loss gets hit on one of the legs. But when the Nifty retreats back and trades within a smaller range, you go and re-establish this position. You can derive more value from this particular trade. So the profits, average profits on winning days will significantly increase. The average percentage, the win rate will also increase, but there will be more drawdowns. You need to be ready for that. This is a very active strategy. You need to manage this strategy throughout the day till you exit both the legs. So you need to monitor the trade. Unlike when we started off, which was a very systematic and mechanical trade which needed very little supervision. Now that we have understood the mechanisms and the reasoning behind this adjustment, let's apply the concept on the live trade that we have been tracking in this video series. If you missed out on the setup and the outcomes of the live trade or want to revise this particular live trade, do click on the link above. If you remember, we had sold Nifty Short Straddle at 16,400 and the stop losses were at 25% of the premium collected on each leg. This particular adjustment applies only in case of case 2 and case 4, so let us focus on that. Let's assume there's a wild swing in the positive direction in Nifty, and this triggers the stop loss on the call side. So we end up booking a loss, and the loss in this case is 2,900 rupees. We have seen several occasions where Nifty, there's a trend reversal in Nifty. There could be multiple reasons for that. Say for instance, profit booking. So let's assume that happens here and Nifty gives up all its gains and starts trading in the negative. This gives us an opportunity to re-enter that call option trade again. So we sell the Nifty 16,400 call option at the same price, 233 rupees. Let's assume Nifty trades around 16,200 levels at 2:30 p.m. and we square off both the put option and the re-entered call option. We now see profit books on both the P leg as well as the re-entered C leg. As you can see in this example, although by re-entry we were not able to offset all the losses, we were able to minimize it. And that is the biggest advantage of this particular adjustment. We are able to reduce the losses when there is a trend reversal and one of the stop losses is prior to that trend reversal, one of the stop losses has been hit. So in summary, again, another adjustment which can further enhance your profitability and win rate. However, you need to actively monitor this strategy. You need to monitor your trade and enter your orders at the right time. But do watch out for the drawdowns and the max losses per day, which could be slightly on the higher side. If you like what you watched, do subscribe to us. Thank you.